Here we've got tradable on a mobile phone in India, the Philippines, Fiji, New York, Vancouver, the Cayman Islands, the same thing. Brilliant. It's a $2.5 trillion market cap today. If we just extrapolate out the trend rate of growth, it gets to $100 trillion by about 2032. So then people go, yeah, but what about the risk return, the volatility? That 150% return is after 3 80% drawdowns. Even if you do have a bubble cycle and then a crash, what should you do? You should buy more technology. Why? Because tomorrow's more digital than today. I think they could have gone earlier because a lot of this was baked in the cake a while ago. If you look at the forward-looking indicators, they've all been disinflating for ages. Don't assume central banks are stupid. That's a lesson I've learned. Assume that they know what they've got to do. If the game is, we need to roll $10 trillion of debt this year, and the Europeans have to, and the Chinese have to, and the Japanese have to, and everybody else, the best single thing would be to lock that in for another 4 years at the lowest possible rates. So it's kind of like, maybe there is a game here, which is to undershoot. I've observed that they're all in cahoots with each other, all of the central banks, plus all of the governments.
In recent days, the crypto market, particularly Bitcoin, has experienced a bloodbath, with Bitcoin's price plummeting below $54,000. However, it has since regained some ground. This decline was caused by the anticipated distribution of Bitcoin from the now-defunct exchange Mt. Gox. The exchange is preparing to return Bitcoin stolen in a 2014 hack, which is expected to flood the market with Bitcoin, potentially driving down its price and value further. Recently, the exchange moved over $2.6 billion worth of Bitcoin to a new address in preparation for this long-awaited redistribution to creditors. It is to be noted that Bitcoin was trading at $600 when the exchange was hacked back in 2014. Now the asset is going for $55,000. Experts believe that creditors may want to sell, following huge price appreciation in the last 10 years. Last month, the exchange announced its repayment plan, which includes 140,000 Bitcoin, valued at $7.73 billion, 143,000 BCH, and amounts in Japanese yen. Additionally, the German government, which had seized approximately 50,000 Bitcoin years ago, has started selling off these assets, disposing of close to 10,000 Bitcoin in the past few days, causing more bearish assets movements. The impact of these events is not limited to Bitcoin. Ethereum is down 14%, currently trading below $3,000. BNB crashed by a massive 14.4%, trading below $500. Major altcoins such as ADA, SOL, XRP, AVAX are charting declines in the range between 8% and 15%. Meme coins also tumbled, with Doge crashing by 20%, SHIB losing 19%. Despite the recent turmoil, prices are beginning to recover slightly. Amidst this wave of sell-offs, Real Vision CEO Raoul Pal offers his outlook on the future of the crypto market. He provides compelling reasons for why investors should consider positioning themselves strategically and buying the dip. Pal's insights aim to guide investors through the current turbulence, highlighting the potential for long-term gains in the evolving crypto landscape. As we bring you clips from the interview, take a moment to like the video, subscribe to the channel, and turn on post notifications for more video like this. You can join the conversation by dropping your thoughts, comments, and observations in the comments section below. Everything you do helps with YouTube algorithm and immensely contributes to the channel growth. Thank you and enjoy the video.
So there's no independence of central banks. They're all working together. You can see how Janet Yellen and Jay Powell operating the TGA, the reverse repo, they're completely working together. Same in Japan, same in China, same in Europe. Everybody's doing the same thing. So I kind of think if they're doing it late, they're doing it on purpose because they're not stupid. They can see the same models. What? My work is better than all of the people at the Fed? No, they're choosing to do it for a reason. Now, the other really important thing, what I think has happened, and it took me too long to realize this, I'm annoyed at myself, is that the Federal Reserve and all the central banks took away left tail risk. Left tail risk in a global macro view really is a debt deflation, which is when the value of your collateral falls too much that you can't pay for the debts and it gets called upon. And people sell the collateral and you get into this cycle. We had that in 2008. What did they do? Debase the currency. What did it do? Optically make asset prices rise, so the collateral went up. The Europeans did it even harder in 2012. So what they've said, and then we did it again in COVID. So what they've said is, you cannot have a debt deflation. We will not allow it. And we will debase the currency by 8% a year to pay for it. Think of that as a put option that you're paying on the system not blowing up, which is a very different way of looking at it, as opposed to, I can't believe they're robbing me of 8%. If you say, hey, listen, it's a mutualized cost of a put option, and we all pay 8% so the whole system doesn't blow up. Okay, so if we've taken away the left tail and everything is correlated on this debt refi cycle, and they have to debase currency over time to do it, well, this may well be the best macro risk-taking opportunity of all time. And then when you just break it all down, what I did simply was divided all of the main assets by the global liquidity, or even the Fed balance sheet, whatever measure you want to use, M2 doesn't really matter. Nothing else goes up. So then people go, yeah, but what about the risk return, the volatility? That 150% return is after 3 80% drawdowns. In debasement cycle, the problem is scarce assets go up because of the debasement, but variable income doesn't. It goes with GDP. So your salary, yes, you're 30, so your earnings go up over time, but generally speaking, offset for that, wages go with GDP. Of course they do. And if GDP is slow, wage growth is slow. So what's happening is everybody's getting poorer. And in countries, the two worst for it are Australia and Canada, where you jammed in huge influx of immigrants with a lot of capital, and a big pension system, you drive up the cost of real estate. So that's what's happened. So nobody will ever get ahead. This is exactly the same mechanism that people don't understand, which is price earnings ratios keep going up. It was like, it's all overvalued, it's a bubble. No, that's variable, and that goes with GDP, and that's fixed because P is driven by debasement. So they're going to keep going up. It's a perfect trend.
Raoul Pal predicts that the crypto market will reach $100 trillion by 2032, driven by the network structure of blockchain technology, which thrives as user numbers increase. He draws a parallel to the internet's growth, where widespread adoption led to the rise of layer-use businesses like Amazon, Google, and Facebook. Similarly, Pal believes that the decentralized nature of blockchain will foster massive adoption, creating new opportunities and driving significant market growth.
What we've got here is a global utility, which is blockchain, much like the internet was. Now, unlike any of these global utility networks, trains, road systems, all of this, you couldn't invest in them. But because this is tokenized, you've got a behavioral incentive system to grow the network, which is the more people come onto the network, the more the number go up, the more people come on the network. And therefore, the more capital in the network, the more applications get built, the more the network gets used, right? It's fucking genius. And we've never seen anything like this, where we're all part of it. So here we've got this asset class, which is a globally homogenous asset, which doesn't exist. Gold is the only one, but gold, if you go to a village in India, the bid-offer spread is 50%. Here we've got tradable on a mobile phone in India, the Philippines, Fiji, New York, Vancouver, the Cayman Islands, the same thing. And it happens to be the infrastructure layer to the internet for the system, for value and storage, and it's that distributed database, which is a public service utility good. Okay, brilliant. It's a $2.5 trillion market cap today. If we just extrapolate out the trend rate of growth, it gets to $100 trillion by about 2032. What is the one that scares me is what happens if the correction in 2026, because we don't have 22, we don't have it, beating out of massive inflation and the pandemic stuff. Imagine if we just only went down 40% in Bitcoin and 20% in NASDAQ. This is kind of my favorite probability. Sure, there's a whole bunch of alts that are going to go down 99%. I'm just talking about Bitcoin. Everybody's going to miss the trade because they're waiting for the down 70. The safest asset's never the best performing. It's simple. There's a risk curve.
Yeah.
Now, it has performed very well this cycle, but it always does at the beginning of the cycle. So yes, I do think the Bitcoin business of selling their block space is pretty robust, particularly in a world of debasement of currency and sovereigns understand the game. So I do think it gets adopted more and more and more. It doesn't do anything else really. Yes, we're trying to build rooms and ordinals and other stuff, but really it just does what it says on the tin. And that works really well. It's an anti-debasement machine that has adoption effects. So I do think that Bitcoin holds its narrative, but over time its dominance falls, just as the space gets bigger.
Raoul Pal believes that maintaining a positive mindset is crucial in helping people identify opportunities in the market and understand how deeply the world has shifted towards digital and technological advancements. According to Raoul, tech businesses will continue to thrive despite market corrections because the world will be even more digital in the future than it is today. Let's get back to the video.
It's all mid-curve. And I don't mean that as an insult. We've all been there. It's like once you simplify it all down, stop all of the monkey voices in your head, filter out all of the noise from Twitter. It's like, is tomorrow more digital than today? Yes, no. If yes, continue. It's as simple as that. It's like the world is going to be more digital tomorrow. End of story. So even if you do have a bubble cycle and then a crash, what should you do? You should buy more technology. Why? Because tomorrow's more digital than today. Change your mindset to look forward to sell-offs. Let's say Bitcoin price goes to 200,000 and it comes back down to 70,000. You get to have another go again. That's a gift. I mean, Anson put it on Twitter and he's dead right. It's like, I cannot believe they give us this gift every 4 years where it becomes the worst performing asset and we get to make another 20, 30, 40x. And so if you use that mindset to say, hey, I'm in this for the long run. I'm going to stay in this trend probably for the rest of my investing life. I'll take money off and I'll do the normal things, but this is my investing journey now, like you do with your 401k or whatever it is. Then you should be very excited and thinking, how do I hoard as much cash as possible in 2025? So in 2026, you can play Chris Boniski on the internet, which is, he got it dead right. He'd hoarded cash and nailed it. And, I was still scrambling around adding. I mean, I luckily added all the way through, but I didn't have a big cash pile to do it with. I wish I had. Now, people might say, yeah, but that's why you sell out of the top. Don't do that. You can sell some out. But the thing is just buy the discounted prices if you get them, when you get them. And then you don't have to worry about nailing the low because you haven't got the money in the market, all sorts of weird stuff that happens. So it's basically not fearing things. It's looking forward to things. If you face your fear and actually turn it into your friend, it doesn't become a fear anymore. It's a psychological trick that works for every single thing in life. Most people live with their fears. They lie in bed thinking, fuck, am I going to make as much money as I want? Is the banana going to happen? And then am I going to lose it all? Okay, because they're thinking too short term. They're not thinking what it could be. They're not thinking about, okay, how do I de-risk it so I don't have to have these thoughts in the middle of the night? That monkey brain can go to sleep. And how can I get excited about the sell-off? Change that. You've changed everything.
That's our video for today, featuring Raoul Pal, CEO of Real Vision and publisher of Global Macro Investor. In this insightful session with YouTuber Blockworks Macro, Raoul delivers an in-depth analysis of the crypto and blockchain technology market, global liquidity, and currency debasement. What are your thoughts on Raoul's bold prediction for the crypto market by 2032? How do you think people should position themselves to take advantage of Bitcoin and market downturns? I hope you got some value from the video. Please share your comments and observations in the comment section below. Subscribe to our channel and give this video a thumbs up. Thanks for watching.